Everyone, welcome along to our live presentation this evening, Building a Trading Plan. My name is Barnett. It's great to have your company. I hope you've had a wonderful day and I appreciate your presence with me tonight. We're going to be here for around about 25 to 30 minutes tonight. So a nice short, sharp presentation on how to build a trading plan, especially if you are new to trading the derivative markets, and how you can really essentially build 4 key principles of success into your own trading. So before we jump in, obviously this is a coaching event only. Any market examples given tonight or discussed should just be part of the learning and coaching process. It is not advice to take specific action whatsoever, just a coaching event only. And of course our product disclosure statement, should you ever wish to read it, is available on our website at fxtrading.com. All right, what we're going to be covering here in the next half an hour or so is really learning what the basics of driving markets. The basics of what's really driving markets, a really key point for any new trader to understand, and we'll cover a little bit about that and where you can research some of that information in a very simple way. Step number 2 here tonight, we're going to talk about learn how to not step in front of the bus before you trade. It's a little bit about part of learning a bit about the fundamentals of what's driving markets around. We'll move on to then about learning one technical strategy to add into your trading plan and the importance of keeping it nice and simple with a basic technical strategy, in particular if you're new to the markets. Learning how to use the same risk parameters as the pros. We're going to be talking about risk exposure and the importance of looking after your capital that you have in your trading account. Learning how to keep your trading plan very simple, and also understanding correlation in currency pairs, which really dovetails into keeping things nice and simple. We'll also move on to obviously the 4 key principles of success into your trading plan, how you can build that in, and we'll have a little Q&A session at the conclusion of our presentation tonight. We'll give you a little bit of a guidance of where you can go to learn some more information on some technical strategies and also some fundamentals around the market. So it's great to have your company with us. I'm going to share my trading platform up tonight. I'm not going to have just PowerPoint slides running through, because I think often people find that to be a little bit boring. So I'm going to just have the MetaTrader 4 trading platform up here. So I'm going to go ahead and share that up with you. All right, guys, you should have my MetaTrader 4 trading platform up. I do apologise for that taking a little longer to come up than I'd hoped, but you should have that up in front of you there. And we're going to switch between that and a couple of other websites as we go through tonight. So step number 1 in building a very simple trading plan. As I said, this session tonight's really designed for anyone that's new to the markets and maybe struggling a little bit about how to get started on building a very simple trading plan that they can stick to and keep as a consistent base for their trading. And first is, in my view, a really critical component of that, and is really step number 1 in the plan, is to learn the basics of what really drives markets around the world. When a lot of people come and look at trading, in particularly the derivative market, and if I'm talking about the derivative market, I'm talking about all of the different asset classes that are available inside of a trade terminal like MetaTrader 4 or 5. A lot of what people do is they very gravitated to the technicals. And what I mean by the technicals is different technical strategies around what's moving the charts around. They often think that it's all about the technicals and all the different strategies out there, and there's absolutely hundreds of technical strategies available for you to potentially learn and add into a trading plan. But really what's driving markets around the world are things like interest rates, inflation data, employment data, retail sales, trade balances, GDP numbers. Those are fundamental themes that are what really driving markets around the world. There's no doubt that some of the technicals come into play, and certainly once a price starts to move in a certain direction based on a fundamental theme that has come out of the market, yes, a lot of the technicals are an extremely important part. But it's enormously important to understand the fundamentals and not specifically understand the micro details of them. But it's important to know when these major announcements are that are really moving markets, in particularly currencies, because that's what many of you will be trading. So what there is there a website, it's a very simple website, and in fact, I'll see if I can share it up to you now for just a moment and point out here a particular website which you can very easily go to and take a look at. And it's called Forex Factory. .com. So you can go to this particular website, you can type it in forexfactory.com/calendar, and it's going to give you an opportunity to take a look at a lot of the major fundamental news announcements that drives markets each and every day. And this is actually a snapshot here on the screen of all of the news announcements really that are coming out throughout this particular week. Now, the reason why I specifically like this website is because essentially you can filter down the different announcements or the major impacting announcements that you like, and you can also set it on your own current time zone as well. So I won't go through those particular details of time zones and things, but you can click on time options and set it to ensure that it's in your particular time zone. But if in the top right hand corner you can filter it, I'm going to show you here how we can filter it down to show us the most impacted news that is coming out throughout this particular week. You'll see at the top here it says expected impact. And you've got a number of event types here as well, or different currencies over here, but keep that quite simple. Leave those checked as they are. Maybe uncheck the yellow and the grey boxes and then click apply filter. And this is going to give you the major impacting news announcements going to be coming out in the markets this week that relating to many of the markets you may be potentially looking at and trading. And this is a really important thing for you to do, because if you've got a particular trade setup that you're looking at on a technical set of charts on a currency pair, and a currency relating to a news announcement is going to be impacted strongly by an announcement and a trade that you're looking at, you're going to not want to be starting to step in front of a bus before that comes out. So I know a lot of technical traders out there, they're not particularly too concerned about fundamentals, but what happens is often they might be looking to take a trade on the AUD, for instance, and they don't realise that the cash rate announcement's coming out at 2:30 p.m. tomorrow. They jump into the trade early morning tomorrow or whenever it might be. It might be a position they're looking to hold over a period of days, and suddenly news announcement comes out, the Aussie whipsaws up and down 50 to 100 pips or whatever it might be in a short amount of time and takes them out, and they've got no idea of exactly what's happened in their trade and why they've been taken out of the position so quickly. So here, each and every day, this is really step one in your plan if you're setting up a very simple basic trading plan, is to check the news each morning. Open up a website, there's a number of them around, you may already have one very similar. I like this one, Forex Factory, and it will very easily give you the major impacting news announcements that are coming out for that day, or in fact, you can have a look for the entire week. Okay, if you're somebody that's maybe an intraday trader or a day trader that's in and out of positions within a number of hours, then looking at the news announcements may not be hugely important to you if you're in and out of trades very quickly. But if you're holding positions maybe as a swing type trader, anything from maybe a day or two through to a couple of weeks, it would be critically important for you to know when these particular announcements are coming out. So this is step number one in your plan. Check the news each morning to ensure you understand the times when these particular announcements coming out and the potential impact on the market. And in fact, if you want to know, if you're not sure, obviously the cash rate tomorrow is fairly straightforward, the interest rate announcement here in Australia. But if you're not sure on a monetary policy announcement that what's that about, you can click the little folder here. It'll drop down and give you some source and specifications, specs I should say, on any particular announcements coming out. You can even go back and take a look at the impact that's had on the markets over the last couple of announcements when that's come out. So it's a really handy little tool to have. So step number one in your plan, folks, is to check the news each morning and make sure you know what's coming out. So essentially you are not stepping in front of a bus before you're prepared to take a position in the market. All right, let's go back to our charts and take a look there. I'm just going to stop the sharing there for a moment and go back and bring back up our trading platform. All right, our MetaTrader 4 trading platform. So step number 2 in our trading plan is really developing a technical strategy that you can add into what you're doing. As I mentioned, a lot of our traders first, when they come along and look at the markets, I think that what drives the markets is all about the technicals. Well, certainly somewhat it can be, but it's important, as I said, to firstly develop an understanding of the fundamentals and what's happening there. But learning and developing one technical strategy and mastering it is really important. And when I say one, I mean one only. Most traders and many traders that I've seen when they come and trade the markets for the first time, they'll complicate things way, way too much and want to learn multiple trading strategies at once. And in my view, if you can't master one, you're never going to master 3 or 4, okay? So when it comes to technicals and things like that, keep it simple. Understand the basic, learn basic chart patterns. There's a lot of opportunity out there, whether it be on YouTube or even over on our website. If you go across to fxtrading.com, you're going to find an education content area of the website. In fact, I'm going to show that before we finish up today. And you'll see there's at least a dozen different types of technical strategies, basic and very simple technical strategies that you can potentially learn and add in as one technical strategy of your plan. And what you want to do is really try to master that particular strategy, use it maybe over a series of 15 or 20 trades and really understand what you're doing. And I would recommend that you only choose about 4 or 5 different currency pairs and understand that particular strategy and really master that first. Understanding a little bit about correlation of trading pairs also is important. We won't go into too much of that tonight, but correlation really meaning, for instance, the Australian dollar and the New Zealand dollar obviously are correlated, commodity-based currencies. So if you are going to just keep things nice and simple, and I do recommend using only maybe 4 or 5 different currency pairs, understand if you're using a currency pair like the AUD against the USD and the New Zealand US dollar, they're more likely going to trend in very, very similar directions, as are a currency pair like the Australian dollar against the Japanese yen or the New Zealand dollar against the Japanese yen. So maybe pick some opposing ones, keep it nice and simple, learn that one particular technical strategy and absolutely be a master of it, okay? Put it in your little trading toolbox. You're going to probably add to some technical strategies as time goes on, but keep it simple. It might sound simple of what I'm telling you right now, but I can assure you folks that some of the best and most profitable traders I've ever seen, when you take a look at the nuts and bolts of their trading plan, they are very, very simple. And this is the type of things they do. They have very few little indicators on the charts they're using. Very often they can trade that trading plan without using any indicators as well, because they're understanding the basics of chart patterns as well. So after tonight, for instance, jump over on our website, take a look at the education area, and you'll see there's a whole host of videos there of just basic charts that you, and just master one. Put it into your plan, make it step 2 of your plan. And when you see that particular strategy come up, or it might be just a basic candle pattern that you're following, like an engulfing candle pattern, something as simple as that, pull the trigger on your strategy when you see it set up, okay? So understand what you're doing with that strategy, and when your strategy comes around, pull the trigger on your strategy. So essentially that is step 2 in your trading plan. Step number 1 is to understand, check the news each day. Step number 2 is learn a basic trading strategy and put that into your plan. Step number 3 in your very basic trading plan to get you moving is to learn to use the same risk parameters as the pros. Really, really important. Your risk exposure in the market is absolutely critical. The capital preservation on your account should be absolutely king, okay? So we need to understand how to do that. In other words, learn how to not blow up your account, okay? When we're trading these particular markets using MetaTrader 4 and 5, where you, depending on where you live in the world in regards to your jurisdiction, you're going to get access to some leverage, okay? And leverage is a great tool to be able to use that the brokers offer you if you're using it very conservatively, okay? So my general advice to you in relation to risk exposure is to keep your risk exposure per trade to around 1% or less, okay? Around 1% or less, with a maximum exposure maybe of around 3, maybe 4%, okay? So your risk exposure really meaning that if you're taking one position in the market, consider keeping your dollar exposure to less than 1% or 1% or less, with a maximum exposure of 3% if you're in one trade or more than one position at a time. Absolutely critical. A lot of times I put my head over the shoulders of some traders that I've been mentoring and coaching and things, and you take a look at their trade terminal and they've got 7 or 8 trades open. You'll ask them, what is your actual dollar risk exposure on these positions? What is your overall maximum exposure? And they look at you with a blank look in their face, and they've got really no idea exactly what their risk exposure is. There's a number of risk calculators and tools that are available for you that can tell you exactly what lot size you should be trading based on the stop loss size you have in the market and the percentage risk you want to take of your account. So you can do a little homework on that. There are lots of little indicators available out there that you can add in or even use on a mobile phone. In fact, I know a number around that you can. And in fact, FXTrading.com in the next month or so is releasing within their MetaTrader 5 an absolutely brilliant risk calculator that you can precisely plug in the stop loss amount in pips, put in the percentage number that you would like to be risking on your position of your account, and it will give you the maximum volume you should be controlling in your position to ensure that you can, if you wish, keep your maximum exposure any time to a nice tight number. It's really, really, really critical. I can tell you folks, nobody gets it right 80–90% of the time, okay? So use great risk and reward, okay? Stop, in my view, this is good advice, stop being concerned about getting it right all of the time. You won't, okay? A lot of traders will come and look to trade the markets and they'll be looking to get it right 80–90% of the time, okay? Focus on your trade, your plan, and see if you can take off the table more than you're prepared to give back for a loss, okay? Meaning that your reward on your positions, your dollar reward on your positions is far greater than what you're prepared to give back for any loss. Great traders are often right less than 50% of the time. And when you tell somebody that's new to trading the markets, a lot of the great traders out there are often right less than 50% of the time and they still make money, often the question is rightfully asked, how is that possible? How is that possible? Well, it's easy. They're taking greater reward off for profit where their profit targets are than they're prepared to give back as a maximum risk at their stop loss. They won't be trading 1-for-1. Okay, 1-for-1 meaning that you might have a 100 pip profit target or a 100 pip stop loss. Okay, if that's the way that you're going to trade, you're going to have to be right a heck of a lot of times to make money in the market. So a lot of traders aren't. It's a challenging thing to get it right, more than 75–80% of the time. So focus on the process. Take that dollar thing out of the equation if you can. We're all in it to make money, of course, but follow the process and the plan using great risk and reward, and see if you can always take off greater chunks of profit than you're prepared to give back for a loss. And keep, as I said, your risk exposure. Institutional type risk is very small percentage numbers, okay? If you're exposing yourself 1% or less, that's a great thing to be doing, and particularly a leveraged market that you're getting access to. So that's step number 3 in your plan, is to learn to manage your risk as a major priority. So the plan so far, your trading plan so far is number 1, understanding when the news announcements are coming out. Check the markets every day, look at the website forexfactory.com to ensure you're understanding when that's coming out. Step number 2, learn that basic technical trading strategy. Okay, that's really important. There's lots and lots out there. Don't complicate things. Gravitate to one technical strategy and master it. Okay, be the master of one before you move on to something else. And step number 3, understand your risk exposure and capital preservation on your account is absolutely king. So that's the 3 steps in your trading plan so far. Step number 4, it's all about repeatable execution. I'll say it again, it's all about repeatable execution. What I mean by that is when your trade is there and there's nothing in your way, like a fundamental news announcement, or you've got too many trades running and you're going to overexpose yourself, you wouldn't be taking the position, right? But when your trade is there and nothing is in your way stopping you from taking that trade, take the trade, okay? Successful trading is a numbers game, okay? You can't pick and choose and be doing that, okay? Picking and choosing is straight out, in my view, is in straight out gambling, okay? It's just what we call punting. You want to learn to become a sniper in the markets, not a duck hunter. A duck hunter is standing there at the charts and just blazing away, going brrr, taking all kinds of trades, okay? When your trade presents it, take it, but be a sniper. Understand that there's no news announcements coming out that's going to impact your trade. If there is, and you might have an overall theme on the market, if let's say the interest rates are rising and you might think that might impact their currency in one direction, that's fine. You have a good fundamental understanding of where that overall theme might go. But be a sniper, not a duck hunter when it comes to your trade. So your plan should be implemented really, in my view, your trading plan should be implemented, in my view, on a demo account first, over probably a series of maybe 20 to 25 trades, okay, as a test of its reward of how you'll trade taking those positions, okay? Don't go just trading any old plan on a real live account straight away, because that's not capital preservation. Again, that's just blazing away like a duck hunter. Get it right on a demo account before transitioning over on a live account, and then implement the exact plan again on your live account. That's really important. And one of the things is don't focus on the win-loss ratio, as I've touched on already. If you only focus on that, you'll likely fail, okay? I can guarantee you now. Think about the process of your plan. Put the money in the back seat and focus on the plan only. Really, really important. You want to treat your trading like a business, okay? Not a hobby. I personally don't know too many people that are highly successful something that don't enjoy it. But if you're doing this and you're doing it seriously and you want to make some serious coin about doing it, treat it like a business, okay? Treat it like a business, not a hobby. By all means, many of you are working, of course, and you have busy lives and things. But if that's the case, ensure that you develop a very simple trading plan that allows you to be looking at the charts for maybe 30 minutes a day. And more of a swing type trading where you're maybe in a position anything from a couple of days through to a couple of weeks. That's more sort of like swing trading. That's an ideal type of maybe technical strategy that you can gravitate to on some larger time frames, like maybe a 4-hour chart, daily type chart, where you don't have to be sitting in front of the charts all the time. Trading can be a really rewarding game for people, or profitable opportunity for people if you are working full time, but it's very, very challenging to do that if you're wanting to take maybe 2 or 3 trades a day and have more of an intraday day trading style. If you're somebody that simply can't sit in front of your charts all day, which many of you can't, which is totally understandable, don't put an intraday day trading type strategy into your trading plan. It's not going to work if you can only look at charts for about half an hour a day. If you're looking at charts for just a small amount a day, use larger time frames, okay? Many of the technical strategies that are coming up that are available for you to look at, and I'll take you over to the website in a minute and show where you can take a look at some basic just chart pattern ones. They all occur across multiple time frames, okay? So if you've got like an engulfing type chart pattern that you'd like to take, a very basic pattern, it will be happening across every time frame, whether it be an hour, 4-hour chart, or a daily chart, or whatever it might be. So if you can't sit in front of your charts all day, which many of you can't, look at using larger time frames. You might be taking a few less trades, but taking a few less trades doesn't mean you're going to make less money. It's very often the opposite, okay? People think that taking multiple trades all the time is going to make them more money. That's very often not the case. So the 4 key principles that you're going to add into your trading is really about building that basic, simple trading plan. Number 1, the fundamentals, understanding what's driving the markets. You don't need to understand the micro details of that. You can just go to one website each day, whatever it is. It could be forexfactory.com, the one that I've showed you tonight, and just understand what announcements are coming out. They're going to be the most impactful on the markets today, okay? That's learning about the fundamentals. You don't have to go into the nitty-gritty details of understanding that. Number two, the technicals, learning that one technical strategy. If you learn one, master it, move on, put that in your trading toolbox and move on to another one. But that's step number two, or the second key principle. The third key principle is your risk management. Absolutely critical, keeping your risk exposure nice and tight. Have a rule around what your maximum exposure is in your plan and stick to it. Okay, stick to it. And number four is all about repeatable execution. They are the four key principles: fundamentals, technicals, your risk management, and your repeatable execution. And as I said earlier, some of the most profitable trading plans I've ever seen are as simple as that. You could write them on the back of a coaster, okay, that you put your drink on. They're that simple. But just following the process, trying to put the dollars in the back seat for a little while and really try to manage that process, what you're doing. Maybe on a demo account first, over 25, maybe 30 trades, if you like. Test it and test its reward and how profitable it can be for you. All right, let's have a look at the time. Before we jump into some questions and things that some of you may have, I'm just going to jump across and stop that sharing just for a minute and jump ahead over to our website. Just bear with me 1 second. Well, I'm going to just leave that because it looks like I can't share that. But guys, what you can do is I highly recommend you going across onto our website at fxtrading.com. You can click up on the education tab. You'll have a drop-down list and you can have a look where there's a link there that says trading strategies. There's a whole host of just basic chart pattern strategies that you can have a look at and learn. And of course, there's multiple on the net these days that are available to you. But keep it simple. Pick out one, gravitate to it. And that's the important thing. If you're looking something and it's not gravitating to you, if it's not, jumping out in front of you and you're not resonating with what they're talking about, move on. Okay, quickly move on. Too many people spend too much time trying to complicate and invent things they're looking at on charts. That's a really, really important thing when you're looking at technical strategies as well. If your technical strategy plan, you can't identify it within 2 or 3 seconds of looking at it, move on. It's not there. Don't try to invent it. Too many traders will look there and they'll start going, oh yeah, but look at that little engulfing candle there and it's setting up nicely there. That kind of looks like my trading strategy. It more than likely isn't. And you're just over enthusiastic about wanting to place a trade. If it doesn't jump out at you, okay, if it doesn't jump out at you straight away when you look at it, it's not there. Okay, move on. All right, we're going to now, as I said, we're just about half an hour on building a very simple and basic trading plan, giving you some 4 key principles that you can add into that. So if anyone has any questions whatsoever, you can type it into the chat feature now. We'll stay here for a couple of minutes and answer anything for you. If you're here, I do appreciate your time tonight. And this will be also made as available as a recording over on our YouTube channel in the next 24 hours or so. So if you do want to have a look back, if you weren't taking some notes tonight, which I hope you did, then you can jump across on our YouTube channel at fxtrading.com and take a look at that over there. How many charts should I be looking at if I'm developing a technical strategy? That's a good one. As I mentioned earlier, I think I said around about 4 or 5 charts initially. I think a lot of times, a lot of traders will be looking at maybe 8 or 9 or 10 different currency pairs and trying to develop an eye on those. It's very difficult to be looking at that many charts, particularly if you're developing a new strategy. So keep it nice and simple with 3 or 4 different currency pairs. Maybe they're opposed to one another, not so much correlating, so you get a bit of an opposing view of where that currency is running, and maybe keep it to maybe some commodity-based pairs and some safe havens, maybe the Aussie dollar, US dollar, Japanese yen, euro dollar, maybe British pound, US dollar as well, just the majors, okay? Try to keep away from the exotics. That's an important thing as well. Many profitable traders, I don't know too many of them are trading exotic currency pairs, okay? Because the news that's impacting those particular countries' currencies is not very consistent. And I would keep it simple. All of the major currencies, if you are choosing currencies, keep it to things like the pound sterling, the US dollar, the euro, the Aussie, the Canadian dollar, the Japanese yen, all of the majors, okay? All of the majors, the most liquid pairs that are out there. All right, guys, thanks so much for your company tonight. We might leave it there. As I said, we won't take up too much of your time tonight, just a half-an-hour session on developing some simple steps of putting into your trading plan, some 4 key principles of success. Hope you found it valuable. Have a great rest of the week. If you are trading live real money, as I said, capital preservation is absolutely king. Keep your risk nice and tight. And I wish you luck, and we'll update with any other future educational sessions that we're running live in the coming weeks ahead. Thanks for your company. Have a great week. Bye-bye.